Assalamualaikum warahmatullahi wabarakatuh. Today, our group will be presenting about accounting in Islam based on an article. The title of the article that we chose is A Closer Look at Accounting for Islamic Financial Institutions. The article published in year 2017. There are two authors, which are Nur Ismail and Zulkarnain Muhammad Sori. Based on Ernst & Young's World Islamic Banking Competitiveness Report 2016, the Islamic finance has been growing quickly. This can be seen when the Islamic banking asset marked at $990 billion in 2015, and currently there are over 600 Islamic financial institutions. The growth is being achieved due to the Islamic finance involved in the provision of financial products and services by Islamic financial statement for Sharia.
We will be going to talk about the accounting Islamic perspective and 4 types of international financial reporting standard IFRS principle, which are substance over form, time value of money, fair value measurement, and recognition based on probability.
The lack of discretism, Ahmed 2012, highlighted accounting for an Islamic perspective is all about practicing principles and incorporating sub-transcendent principles into daily living. Always he goes with and obey his command as impressed in the Prophet's sunnah. Accounting must recognize socio-economic and religious events and transactions for an Islamic perspective. It must fulfill its ultimate responsibility to Allah and ensure that human financial transactions are fair and just financial transactions between human beings. This is because the goals of accounting and management for the Islamic perspective are not merely worldly and money-oriented. The Accounting and Auditing Organization for Islamic Financial Institutions was founded in 1990 to satisfy the needs of Islamic financial institutions in terms of accounting standards. It was established in 1991 in Bahrain. The objective of the Accounting and Auditing Organization for Islamic Financial Institutions are: first, to develop accounting and auditing through relevant to IFRS. Second, to disseminate accounting and auditing through relevant to IFRS and its application through training, seminar, publication of critical newsletter, carry out and commissioning of research and other. Third, to prepare, promulgate and interpret accounting and auditing standard for IFRS. And lastly, to review and implement accounting and auditing standard for IFRS.
The first analysis of 4 accounting assumptions is the substance over form. Substance over form is an accounting principle that is used to ensure that the financial statement is complete and an accurate transaction. To emphasize more about this issue, Institute of Chartered Accountants of Pakistan is opposed to trade-based transactions. And they mentioned that in Islamic finance, one cannot have a transaction whose substance is different from its legal form. If a trade transaction is not a genuine transaction and it's just a financing transaction, then it is not acceptable in Islamic finance. This gives the meaning that the transaction substance and form shall not deny the truth of one another and must be consistent. As an effect of inconsistency between form and substance, the Sharia is the most important one on substance. Most of scholars from the Maliki, Hanbali and Hanafi schools considered that the meaning of contract except if there is any legal form opposed to the consideration. The Sharia Advisory Council of Bank Negara Malaysia also has adopted most of the view of recognizing the substance over form. Others consider that it would give more benefit to users to show that the economic substance of financial transaction. Despite all of that, Shafi'i scholars preferred the principles of form over substance. It clearly shows that those who have confidence that the recognition of an Islamic financial transaction should highlight more to its legal form to differentiate it from a participate conventional equivalent, and it claims that the substance of a form is an unconcealed violation of Sharia. The variance of reporting practices is the proof from analysis on the International Financial Institution, which also known as IFI, Financial Reporting Practices. The analysis of financial reporting on leasing transactions shows that the International Financial Institution adopted the MASB accounting-based reported asset with the substance over form principle. After that, Al-Ijarah are not recognized as the bank's asset, but they are recognized as financial assets under the Al-Ijarah contract. This specifies that economic facts of the loan transaction is acknowledged as more dominant than the legal form.
Next principle, time value of money. It is a basic investment concept and a basic element in the conventional theory of finance. It also permissible only for exchange contracts that involve deferred payment, and it is strictly prohibited in loan transaction or court. This means that time value of money is only applicable in exchange contract, not in a loan contract. This is because interest-based transactions are prohibited in Islamic finance. From author named Shafi state that this concept is acceptable in contract of exchange whereby the deferred price will be higher than the spot price. In order to uphold the element of justice between the contracting parties, however, charging an extra sum for the deferred payment of a court is not acceptable. Islamic law recognizes the selling price difference between a cash payment sale and a deferred payment sale such as murabahah. Due to time factor involved in determining the value of the contracted item, Muslim jurists agree that a higher price can be charged in a deferred payment sale. It also can be said that Sharia does not completely rule out the concept of time value of money. Islam also does not prohibit any increment in sale contract to be paid at a future date due to a repayment of financing involve paying more than the principal to compensate for the time involved. Time value of money except for the purpose of pricing of goods only, and not for the pricing of money or debts. In Islamic finance, you cannot use money to make more money, and there must be an underlying asset or production of some sort to produce a profit.
Fair value refers to the amount of assets that bought or sold in the current market. Fair dealing and commercial dealing are important in Islam, but there's way to influence market price by manipulating market conditions. But commercial transaction in Islam must be conducted on the basis of fair value. There are two prohibited sales in Islam. Firstly, talaki al-rukban means when the buyer brings goods into the market and offer to the buyer at higher price. If this happens, the importer has the option of cancelling the deal once the goods arrive on the market. Secondly, nudge, where it's prohibited by consensus. The meaning is the seller attempts to sell goods for more than its fair price by conspiring with fake bidders that they bid up the price to ensnare the buyer. If this happens, the seller and the bidder will sin. The prophet said, intercepting items before they are offloaded in the market is not a good idea. As I mentioned before, fair value is the amount would be received to sell an asset or paid to transfer in liability. Bank Islam Malaysia, Berhad, use market information as well as valuation technique to estimate market value of asset or liability. For example, when the information available, they will measure the fair value using the quoted price in active market. But when there's no quoted price in active market, they use valuation technique that maximize and minimize the use of unobservable inputs. While for investment, fair value determined by the reference to quoted market bid prices. If there's no quoted price, a reasonable estimate of the fair value is determined by reference to the current market value.
The examples of recognition based on probability in an IFI are: firstly, recognizing a liability for expected payments to mudarabah account holders, and secondly, recognizing impairment of financial assets based on an impairment models. Thirdly, recognizing mudarabah receivables using the expected rate of profits, and lastly, recognizing income and expenses based on an expected future cash flows. Certainty is recognized as the highest level of trust in Islam. Legal scholars should be aware that they set certain parameters when accepting the concept of fixed probability. PNM's SAC has also determined that the use of probabilities in Islamic financial reporting is permissible as it is consistent with general Islamic law principles. Other fatwa issuers have not yet issued a specific fatwa on this principle. Disagreements about how to account for Islamic financial transactions have led to different treatments of different transactions in different jurisdictions. Therefore, cross-border comparability needs to improve by standardizing Islamic transaction reporting. This is easily achieved by applying IFRS, but the substance of the transactions and its funding effect will be disclosed. This may not appeal to any particular stakeholder. Therefore, the challenge for standard setters and stakeholders is to improve the cross-border comparability of Islamic financial transactions, taking into account religious sensitivities. Although IFRS is internationally recognized, there is resistance from those who have believed that some IFRS principles are inconsistent with Shariah's interpretation. As a result, a separate accounting framework for Islamic financial transactions is guaranteed. However, Malaysian regulatory agencies have issued guidance to IFI on how to comply with MASB standards as key accounting standards comply with Shariah's requirements.